Welcome traders to another Tickmill trading update with me, Patrick Munnelly. Want to update the SP500 view using the E-mini futures contract and put together a trading plan for the week ahead, looking at some high probability action areas and price targets that we have in play for this holiday shortened trading week. So before we jump into the technical picture, let's review where we are in terms of the price action from last week, market dynamics, market narratives, and where we sit in terms of market internals. Last week, the S&P 500 closed down 1.9% for the week. For the month, the S&P is actually down 3.5%, while still positive on the year, up 12.3%. The S&P currently sits 4.6% off its all-time highs. In terms of sector development last week, Infotech led the decline, down 5.2% on the week. The decline puts the XLK down 10.7% from the all-time highs, and now technically in correction territory. Consumer discretionary and energy also took some heat last week as well. There was buying activity though within the more defensive healthcare sector, which was at 1.8% on the week. Nvidia's earnings failed to relieve the concerns about tech valuations in AI, and the fringe players especially all took significant hits last week. In terms of the calendar for the week ahead, all the significant earnings are out of the way now. The government in the US is back open and data is slowly coming in. Tuesday and Wednesday are data-heavy sessions. We have ADP employment, PPI, retail sales, and then on Wednesday, durable goods, initial jobless claims, and Chicago PMIs. And then we would expect to see liquidity start to dry up as we obviously head into Thanksgiving on Thursday. US markets are offline, and it's a holiday shortened day on Friday with markets closing at 12:15 Eastern time. In terms of the narratives that are in focus at the moment, it really is coming from a few areas. One is the renewed possibility of rate cuts after Fed Williams' speech on Friday, which has the market favouring a rate cut once again in December after that pretty much being off the table prior to Williams' speech. And there are two significant developments in terms of the White House: the potential chip sales to China, and the question being, do they even need those chips at this stage with developments in China over the weekend and the new ChatGPT competitor that they have? I think 10 million downloads of the app over the weekend are performing exceptionally well. And then the other area which may add some support to the markets is the potential for a peace deal between Russia and the Ukraine. And the White House, I think, are really aggressively pushing for a win here. And I wouldn't be surprised if maybe we get an announcement prior to Thanksgiving. However, Marco Rubio, the Secretary of State for the US, has pushed back that deadline into the following week. So we'll see how things develop in terms of the narratives. But those are the key data releases and the market narrative that we have in play at the moment. In terms of the breadth, no real change from the week before. Stocks trading above their 20-day moving average is slightly improved, 47% from 43% the week prior. Stocks trading above the 50-day, 39%, so slightly lower from the 43% week prior. And more importantly, the stocks trading above the 200-day moving average sits at 53%, down from 56% last week. So the holiday week follow through is what buyers are looking for, to bring all three of those readings above the 50% to put a base below this market at the moment. So in terms of the charts, let's see where we are on the technical picture. Starting with the monthly, I draw attention to that. On the 5-period volume weighted average price, we have just reclaimed the 66.45 handle, which is maintaining bullish momentum on the monthly time frame. Keep an eye on that. That's 66.45. A close below there on the month would see would see us flip into bearish momentum on the monthly VWAP. In terms of the weekly, 67.35 is the key area there. So trading well below that at the moment, but I'll talk more about that area shortly because that is going to be a target zone. And in terms of the daily volume weighted average price, 66.15. So we gapped up last night. So we've got bullish momentum in the near term as per the VWAPs. In terms of the daily structure, we're now one time framing lower, 66.77 on the daily. On the weekly, we're one time framing lower, 67.91, and the monthly now, as of last week, has shifted towards its first breach of its one time framing higher on a monthly time frame for the first time in 6 months. So those are some structural analysis there to keep in mind in terms of where we sit from a structural perspective. The aggregate gamma flip zone is sitting around 67.70. So you want to keep that area in mind because as we trade below there, we still have significant volatility being driven by dealers hedging flows. And certainly at this stage, we're sitting pretty deep in negative gamma, which tends to exaggerate moves. And certainly also bearing in mind we have this holiday shortened week with lower liquidity, probably from Wednesday onwards. There is certainly a heightened potential for volatility, and something you certainly want to factor in terms of one, your position sizing, and to your stop management. The end of month straddle for November, which we're heading into now, 70.54 on the upside. Not likely at this juncture, possible but not probable that we test up into there. 66.26 on the downside was the support area. So if we can continue to hold above there, then I think we can see some follow through here to the upside as we head into the week. In terms of the setup on the daily time frame, you'll recall that last week I talked about the wave structure here in terms of our 1-2 on the daily, and we were looking for 65.60 as an equality objective. So let me just draw in what I'm talking about and reference that. So we have our wave 1, our wave 2, and then we have our wave 3 high. We're looking for a wave 4 equality objective, like I say, 65.60s, which we managed to hold on a closing basis. So that still technically now sets up a 5 equals 1, and let's just overlay that to get the target zone. Pretty good job of guesstimating that there. So the 5 equals 1 now sits at up at 72, 72.40, 72.50s would be the ultimate upside objective if we hold current lows for this 5-wave sequence to complete. So that's to keep in mind in terms of ultimate upside objectives for this current sequence that we're in. And we need to see now how we trade during this week, and then into, obviously, we have the final few trading weeks of the year. If we can hold this base, then we could be setting a longer term wave 4 low in place for that ultimate wave 5 objective. But as you will know, I certainly am more in favour of taking it one session at a time, but noteworthy to have these targets in mind as the price actually develops. So let's jump into the intraday setup and what I'm looking for as we head into the week. So this week I'm using a weekly bull bear zone of 65.90 to 65.80. So any pullbacks into that area, I'm looking for a rejection there or a very brief breach and then reclaim to engage on the long side. We're looking to target a test of Friday's highs back through the 66.70s. And then we have daily projected range resistance today coming in at 68.90. So any pullbacks from there, we want to see buyers defend this value area high from the overnight and the volume point of control. So getting back into this 66.60s, 66.50s as support is maintained there. Then we're going to target for the week probably what is likely to be a grinding type move as liquidity dries up, into test the weekly projected range resistance. So we have 67.65 as our weekly projected range resistance. Notice the volume point of control for November so far sits just above there at 67.75, and we have the highs prior to that dramatic sell-off at 67.90. So those will be the principal upside objectives, and certainly if we're trading into that area into the back end of the week, somewhere I'd be looking to book profits and potentially play counter trend shorts. If we fail to hold the bull bear zone as support, then I would look for a pretty quick retest of last week's lows into those 65.20s. Then as the bull bear zone acts as resistance, I'd actually be targeting a move down, looking at monthly projected range resistance 64.90s, and then on to our downside target there of 64.75 being the weekly projected range support as the principal downside objectives if we don't hold the weekly bull bear zone. Again, there will be intraday trading opportunities around these levels, but those are the key markers as we head into the week. As always, traders, plan the trade, trade the plan, and most importantly, manage your risk. Until next time, thanks very much.